This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on June 22nd, 2012. Our time is 8:48 Mountain, 10:48 Eastern. Radio show runs AM 640 in Toronto, 630 CHED Edmonton, QR 77 in Calgary. For those that listen in Calgary next weekend, the show normally runs at 4 o'clock on Sunday. We will be on at 2 o'clock. Keep that in mind. 2 o'clock in Calgary on Sunday next week due to Stampeders football. If you ever miss a radio show, we are online. Harold's websites, HESradio.com, RareColoredDiamonds.com. The shows are archived there. You can also sign up for our podcast. We would be more than happy to be portable with you anywhere you go. Harold, it was a crazy week on the markets. Of course, we were expecting some sort of easing. It ended up being Operation Twist. The market was disappointed, wants QE. Doesn't look like that's going to come until the fourth quarter after the elections are over. But there's one quote that I thought was quite striking to start the show here before we get to your commentary. It's from Robert Fitzwilson, 40 years in the investment business. He said, a senior officer in the London Fire Rescue Service was quoted as saying, when people die in fires, it's not because of panic. It's more likely to be the lack of panic. The reality is that people generally look to their peers, waiting until the group panics, and by then it's too late. Well, it may not quite be the time to panic just yet. The survivors and those who will prosper at the end of this great historic period in our financial affairs should quietly be moving towards the exits and the safe haven, the safety of hard assets such as gold and silver. And what we're seeing right now, Harold, nothing has been fixed. And hard assets, even though they took a bit of a hit this week, they still are the place to be.
Well, that's very true. Again, a very, very volatile week. I'm sure a lot of people are very upset and very discouraged with what's happening in the markets. You know, I've been in the financial business for over 30 years, and I've done financial radio for over 2 decades. You know, for those out there that have just started listening to our show, I must look like I don't really even know what I'm talking about. You know, this year, as I do at the beginning of every year, I predict at the beginning of the year what the markets are going to do, and we've had great success over the last decade. I did predict at the beginning of the year that gold, would trade above $2,000. I predicted by the end of the year silver would trade near $50 to $60, and I also predicted that oil would trade between $150 and $200. So far, my predictions look lame, and it's certainly, there's certain people out there that are getting discouraged, and I certainly can't blame you. However, the state of the world financial markets is so severe that we're dealing with countries going bankrupt, currency devaluations, derivative scares, fear, panic, confusion, and the potential of either deflation or massive inflation. So what the markets are looking at right now, and the reason that the markets tend to be falling, is that they were disappointed that the Federal Reserve that had their meetings this week didn't do a quantitative easing 3. And the reason that they didn't do it, and we all know what the reason is, it's an election year. And the fact is that President Obama wants to get reelected, and he doesn't want to do anything that's going to put that in further jeopardy. However, by not doing QE3, the stock market plummeted, and so did the commodities markets. So the fact is the TSX was down over 350 points on Thursday. The Dow was down over 250. Gold was down over 40. Silver was down over $1, and oil broke through the $80 level. So the fact is that gold broke its support level at 16 and a quarter. Then it broke 1600, and now it's trading right at around 1560 in that area. There's potential for the gold market to drop, into the 1400s. And that wouldn't, be a massive concern to me. The fact is that the market's cleaning itself out at this point here and getting rid, of the short-term futures traders, and that's basically what these markets do. Silver's just broke its support level, and it could fall a little bit further also. Now, oil, which I'm also extremely bullish on, also broke the $80 level and could trade slightly lower. However, I can assure you that OPEC, which is the Organization of Petroleum Exporting Countries, they will not let the oil markets fall apart. They will cut production, and they'll do that at almost any time. And the fact is that just because oil has come down, and we knew it would come down this year, and you're probably saying, if you knew oil would come down, why did I predict when oil was above $100 that it was a good buy? Because over the long term, I still believe that oil is going to be over $150 to $200, and we wanted to make certain that we were in the market if something happened between Israel and Iran, and I still believe that that is going to happen sometime this summer. So all in all, the fact is that the markets are extremely volatile. They were extremely disappointed, that they didn't do quantitative easing 3, and the markets all sold off on Thursday and will probably follow suit on Friday. So does that mean that we just admit defeat and get out of the markets and just lick our wounds? And my feeling to that is absolutely not. The fact is that nothing in the world has changed in the markets. There are short-term traders, and we are buyers and holders. If you trade these markets, as volatile as they are, unless you're an expert trader, the chances are is that you're going to lose all of your money. But the fact is that if you bought gold and silver, and we first started buying gold at $250, even at $1,500, this market is up tremendously from where we bought it. And as far as the predictions of $2,000 and above in gold and $50 to $60 in silver, I still think we have an excellent chance of hitting those type of numbers this year or the first quarter of next year. You see, nothing changed. In fact, things are getting worse and worse. The problem is the confusion that's in the market right now. People can't understand why these markets are doing what they're doing. But the fact is that every country in Europe and in the United States and even China are going through terrible financial situations. And the fact is that the debt situation is so severe, they have no money coming in. So all they're doing is short-term situations to try to right the ship, but the long-term situation is very clear to me, and it's clear to a lot of people that are in this business that are not stock traders. Wall Street has their own opinions. People that are more realistic as to what the world economy can do and what it is doing have their own opinions, which is myself, John Embry, and guys like us. And basically, there is no doubt in my mind that the only solution to what these countries are going through now is going to be, if they want to get their economy started again and have any type of growth whatsoever, they're going to have to add money eventually to the system. Whether it happens today or whether it happens in the fourth quarter after the elections, they have to do it because the country is out of money and they can't go forward. And without any growth, the fact is that they're going to go into a depression. So again, it's only a matter of you can pay me now or you can pay me later, but there is absolutely no doubt in my mind where these markets are going to. And the only solution to what, or the best solution to what China, the U.S., and Europe is going through is a strong influx of capital. And there's only one way that that can happen is to print that money. There is no other money. Nobody has any money to bail anybody out anymore. All that money has been lost in real estate derivatives and the stock market and all those horrendous investments. So basically, almost everybody is in the same situation. I know myself personally, again, what I'm doing for myself and for my family and for my clients. We're very, very conservative. We're not trading the market. I'm buying and holding my gold and silver. I bought gold, I bought silver, I bought diamonds, and we just hold them. The fact is that the markets are volatile, and the more volatile they get, the more potential they have to explode to the upside also when the right scenario happens. So again, in the 30 years that I've been in the investment business, I've seen an awful lot. And I've been through similar situations, granted not as severe as we're going through right now, and I can certainly understand everybody having their own views. But again, we do this radio show each and every week. We've done over 500 radio shows, and so far our predictions have been bang on accurate. Right at this particular point, because the markets appear to be going against us, does not mean that this play is over in any way, shape, or form. Don't trade the markets. Hold your gold and silver. When the markets come down a little bit further, if you can afford to buy a little bit more and average down your position, you should do so. There is no doubt that the result of of bailing out these countries and getting their economy started again, there's only one way that's going to happen, and that's with an influx of a huge amount of money, and there's only one way that can happen, is to print it. They're going to print it in Europe, they're going to print it in China, they're going to print it in the United States, and we're going to see prices in gold and silver like nobody has ever dreamed before. So please don't get discouraged over this. Again, I've seen these situations happen before. We've been through these type of scenarios. Don't forget the Lehman situation back in 2008 made the Dow drop from 14,000 to 6,500. Gold plummeted, silver plummeted, oil plummeted. Everything fell when Lehman went under, and then everything came back. Gold came back, made brand new highs, went to 1,900. Silver went to 50. The stock market came back up to, up to around 13,000. Oil market came back up to 110. The same scenario is going to happen again. I know you're nervous out there. I'm here to hold your hand through this thing. And the fact is that, we're not going anywhere. No matter what, other people do radio shows and make predictions, and if their predictions aren't working out, they run and hide. That's not something that Randy and I have ever done. We've had our trials and tribulations. We've had times where we've been euphoric, and the markets have hit highs, and our clients have made fortunes. There's been times when the markets have, fallen and hurting us over a short-term period. But again, as long as we keep our heads about us, as long as we're not emotional and we deal with logic instead of emotion, and as long as we understand the reasons for what's going on, and our game plan is sound, which I believe it is, I'm not changing a thing of what I'm personally doing for myself and for my family. I own gold physically, I own silver physically, I own diamonds physically. I have no debt, and I keep cash on hand, and that's basically what my scenario is at this point. I've told that scenario to most of my clients, and many of my Canadian clients and clients all around the world are in similar situations. We don't want to speculate, we don't want to get emotional, we don't want to make a mistake. All we want to do is have success when this whole thing is over, and I believe when all the dust settles, we're going to be standing strong, financially strong, and ready to go to the next level. So again, I'm here for anybody that needs to talk to me. I speak to clients every day. If you're concerned about what's going on in the world economies and with your own portfolio and you don't know what to do, pick up the phone and call our toll-free number and set up an appointment, and I will spend as much time with you as you possibly need. Again, let's not get emotional over this. Let's do the logical thing and be smart about it. I've been through these situations before, and it's been proven in times of extreme financial difficulty, hard assets like gold and silver and diamonds always shine and always do the best, and I'm 100% confident that when all the dust settles, we'll be standing at the top.
Harold, you're right. We need patience right now, and we've done this show for over 10 years. We've been through a lot of ups and downs, and a lot of it, looking back on it, if a person was just patient, had a long-term vision. There have been times where silver was around $10, pulled back, was around 20, pulled back. If you had a long-term vision, you did very, very well. The truth of the matter is, now's the time to take care of yourself and your personal finances. The financial crisis that happened in 2007, 2008, the same people are pulling the levers. Ben Bernanke, it's no surprise he didn't do quantitative easing 3 because, let's face it, he didn't see the financial crisis coming. He doesn't see the crisis. I personally believe there's potentially another financial crisis coming. All you need to do is look at our newsletter and see all the different articles, all the different financial experts saying that the end game is near. So don't rely on politicians or governments or the Fed. Now's the time to protect yourself, because the same people that were there during the financial crisis are still there, and it's time for you to take charge. Speak with Worldwide Precious Metals. Harold, that is the company he recommends you use, a Canadian company in business for over 10 years. 10th anniversary celebrations underway. They have 10th anniversary incentives. Learn about investing in precious metals, gold, silver, platinum, palladium. Start your own precious metals investment account. Get the newsletter. It is a must-read. It's a companion to our radio show. It keeps you informed every week as to what's going on. And when we have volatile weeks, as we did this week, This is why you want to listen to the radio show and you want to go through the newsletter. You can go through the newsletter in about 5-10 minutes, or you can spend hours if you want. Speak with Worldwide, 1-866-623-2002, 1-866-623-2002. Their website is wwpmc.com. Having done the show with Harold for 10 years and putting the newsletter together, nothing has changed. The fundamentals have not changed. You go through everything that's happening in the world. Sovereign debt, the United States with their debt and deficit problems. The jobs market is horrible in the United States. Real estate market is not good. Geopolitically, there are so many different issues that are happening around the world. Hard assets ultimately will win out the day. Egon von Greyers was interviewed by King World News. Eric King has a fantastic website, King World News. Take a look at it. We include some of the stories, links to the stories in our newsletter. He was actually quoted as saying, Egon von Greyers, in an interview with Eric King, the stock market is down 80% against gold over the last 10 years, and it's likely to decline at least another 90% against gold. That will be a disaster for most investors. Richard Russell of the Dow Theory Letter said a long time ago, and he's experienced the last depression in the 30s. When this starts, everyone will suffer. It's just a question of who suffers the least. Sadly, that's going to be the case. And that's why Harold has said, profit and protect by having hard assets. Jim Sinclair, we've followed him for many, many years. He believes quantitative easing to infinity will be the case. He was quoted as saying this week, the longer the Fed waits, the bigger the QE to infinity program will be. The U.S. economy is getting ready to fall off a cliff. James Turk quoted this week, Operation Twist is just kicking the can down the road. The Fed felt it had to do something, but it's getting so close to the election that I think they decided not to do QE at this time. The other thing is they are probably saying QE for saving it for another major crisis, whether it's a bank failure, a derivatives blow-up, or something of that nature. Bill Fleckenstein said this week, so Bernanke has taken a half step towards doing something aggressive. The Fed has extended Operation Twist and left the door open for more. Maybe they didn't do it because they are hoping things are going to get better here economically, or because they are waiting to see what happens in Europe and they want some bullets left to save some bullets. If you think they are saving some bullets, that would mean that they would be smart enough to plan in advance, which they really don't seem to be able to do. What's happening here is they were wrong in their assessment of the economy once again. They thought it was getting better. It wasn't. Going forward, the economic data is not going to be very good, and the uncertainty through the election is not going to be helpful. So I think Bernanke will be forced to act again before the fall. That sets us up to quantitative easing 3. And if you take a look at our newsletter, we have in the gold section of our newsletter, Speak with Worldwide, get your name on the list. They'll send it out via email free of charge every week, 1-866-623-2002. The website, wwpmc.com, their website. If you take a look in the gold section of our newsletter, we have a chart of the week. Societe Generale is very bearish, and there's a chart there, and it lists off all their concerns. One thing they say here is hold tight to gold ahead of QE3. There's a story below it. They actually go on to say that gold could surge over 500% based on quantitative easing. And they are very, very bullish. In fact, they go on to say that it could go gold to $8,500, short-term $1,900. And to give you an idea, if we did have quantitative easing, what we have seen in the past, and this is a stat from Bloomberg, gold rose about 70% as the Federal Reserve bought about $2.3 trillion of debt in 2 rounds of quantitative easing, or QE, and that ended in June of 2011. Gold rose 70%. And Harold, you know, you take a look at what's happening right now in the world. There are so many financial landmines out there. The sovereign debt crisis over in Europe, the U.S. debt and deficit's a huge problem. They're talking about this financial cliff in the United States at the end of the year with different incentives, tax breaks they have coming off, and they have to get a balanced budget, and the debt ceiling needs to be raised. I'll tell you, it's financially, it's a very frightening time.
You bet. I certainly would not want to be president of the U.S. at this particular point. I mean, the stress level has got to be insurmountable. I mean, everything is going wrong all at one time, and you know yourself, all of us know it. You know, when you're short on money and money isn't coming in, how difficult things get when the phones start to ring and the bill collectors start to call. You know, it's no different with the U.S. They owe $15 trillion. It's unbelievable how much in debt they are, and at a time when the economy is not doing well, it means that they don't have a lot of tax dollars coming in. People aren't earning as much. There's a lot of unemployment, so you know, countries work on tax dollars coming in, and the fact is that there's very little coming in. That's why this situation is so severe. So again, no matter which way you look at it, no matter which way you cut it, they have to print some money to be able to get the economy going so it'll grow so more people will pay taxes, and that's ultimately what's going to happen. That's why I'm confident just to sit back and let the markets come back to us. Don't get emotional. These markets will go higher, and the fact is we've seen it probably 20 times in the last 10 years that we've traded these markets.
Learn about investing in precious metals. Educate yourself. If you do not have hard assets in your portfolio, start your own precious metals investment account today. Speak with Worldwide Precious Metals. It's their 10th anniversary. Great Canadian company in business for over 10 years. They have anniversary incentives. 1-866-623-2002. Their telephone number, the website, wwpmc.com, wwpmc.com. We know you're listening to the radio show. You're listening to the podcast. Well, get the newsletter, because that is going to have you on the exact same page that Harold and I are on when we're doing this radio show, and you can go through it. We know you're busy. You can go through it in 10, 15 minutes. You can go through it on your smartphone. I've done that. You can spend hours if you want, but you can go through it very quickly and be up to date in a short period of time. It's the companion to the radio show. It's a must-read. Get your name on the list. Speak with Worldwide. We send it out via email free of charge every week. 1-866-623-2002. WWPMC.com is their website. Cesar Bryant with Gabelli Gold Fund said this week, in this environment, gold is fine to buy anywhere near these levels. The long-term story for gold remains absolutely intact. We have a lack of confidence in the economic management of the country, and in that environment, gold is king. One should not worry about the short-term moves down in the price of gold. This happens virtually every time a central banker is speaking. In the end, it just creates a buying opportunity. Another positive, Richard Russell said this week that his short-term target for gold, he said $1,650 and $1,700. Once we get beyond that, he believes that we're still in a primary bull market, and the bull market will be stronger than any group of bears. But he goes on to add that the United States will lose control of the gold market and their control over it due to what's happening in Asia. They are setting up exchanges, and they are going to change the way gold is traded, and that will be a huge positive for the gold and silver market in the years ahead, as there are other exchanges other than what's happening in the United States, and there are questions as to what's being done. To invest in precious metals, the telephone number 1-866-623-2002, the website wwpmc.com. Going to come back, talk about diamonds and a very successful auction for hsfineauctions.com. As the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on June 22nd, 2012. Our time is 9:12 Mountain, 11:12 Eastern. Radio show runs AM 640 in Toronto, 630 CHED Edmonton, QR 77 in Calgary. Should mention once again, next week in Calgary. Normally we're on Sundays at 4 o'clock. And on Canada Day, we will be on at 2 o'clock. That is to make way for the Calgary Stampeders. to invest in precious metals. The telephone number, 1-866-623-2002. The company Harold recommends you use, a Canadian company, been in business for 10 years. You can speak to them about their 10th anniversary incentives to start an investment account, a precious metals investment account, worldwide precious metals, wwpmc.com, 1-866-623-2002, their telephone number. And definitely get your name on the list for our free weekly newsletter, the companion to the radio show. It is a must-read every week, and you can go through it very, very quickly. Harold's website is rarecoloreddiamonds.com. And if you'd like to connect with Harold when it comes to investing in diamonds, 1-800-432-1022 is his telephone number, rarecoloreddiamonds.com. It is a spectacular website, has video of all the diamonds. His other website is hsfineauctions.com. There was an auction on Tuesday that was a huge, huge success. Harold will tell us about it here shortly. Our featured diamond of the week. You can go to Harold's website and take a look at the featured diamond. We've had a string of just stunning featured diamonds. I don't know where Harold and Jonathan are getting these diamonds, but they are amazing. This week's diamond is a 25-plus carat cushion-cut, fancy, intense yellow diamond, and it is amazing. We had a quote this week from a Reuters article. Clifford Elphick, who is the CEO of Gem Diamonds, he says, "There are only so many diamond mines, and the population of the world is wanting ever more diamonds. People are consuming diamonds more than are being mined." And one of the other stories we found this week, the coolest things bought by rich people this year. And this was from Business Insider. And Harold, I know you saw this in the newsletter, the two items that were purchased of the top 50 that they had. A yellow diamond sold for $12.4 million. We talked about that on the radio show in the past. And also a pink diamond that sold for $17.4 million. They were on that Lux list, if you want to call it that. So, yes, diamonds doing very, very well in this environment. When you have the stock market plunging, you look at your diamond and you've got a store of wealth, and you have something that's beyond that, a thing of beauty, nature's art, Harold.
You bet. And with these markets as volatile as they are, it's a relief to be in the diamond market, believe me, because these markets don't go down. They don't trade on exchanges. So they don't trade like stocks and commodities do. So, every market has its own worth type of thing. And, the fact is you need a balanced portfolio. In these times when things are so confusing and different than the 90s were, for example, back in the 90s, the stock market was very strong. The U.S. dollar was very strong. The economies were strong. The real estate markets were great. People were working, and everything was great. You could have thrown a dart against the Wall Street Journal and picked a stock that was going to double or triple. But those days are over. The fact is that you can't make money in the stock markets anymore. In fact, most small investors are out of the market. The ones that trade the market are these major funds. You don't really stand a chance in those markets anymore because it's really got nothing to do with fundamentals anymore. It's all these electronic trading situations and these hedge funds that just make the markets go berserk. The fact is that with the way the markets are right now and the world markets, and as confusing and dangerous as they are, there are certain assets that you should own that are safe, that you can just put away, that do well outside of the realm type of thing. And that's always been the rare colored diamond market, but never more important than it is right now. With as volatile as all the markets are, where they're talking about potential destruction of certain currencies and markets as we know them, to own a diamond could be sold in other currencies. One of the reasons that our auctions have been so successful is that we've had many buyers from Europe that have entered into the markets with us and bought our diamonds because their currency is so much stronger than ours. So the fact is the currency markets has an awful lot to do with investments in general, especially in the diamond market, and that's one of the major reasons that we brought the diamond markets to our clients. If you look at my website, rarecoloreddiamonds.com, it's like a museum. We carry some of the most amazing diamonds that you could ever possibly see in your lifetime. And as beautiful as they are on the website, because they're all videoed, the fact is that in person they're even more beautiful. When you look at yellow flawless diamonds, and that's all that we offer in yellow diamonds, is the very best that you can possibly buy because they have a track record. Yellow flawless diamonds, they increase by 25% a year. They double every 4 years, and during times of high inflation, they go up, and they have gone up 500% in 1979 and 80. That means that if you bought a diamond for $20,000, a yellow flawless diamond in 1978, by 1980, that $20,000 diamond was worth $100,000. That happened then, and we believe the same thing is happening now. So if you look on our website, rarecoloreddiamonds.com, and you go to the loose diamond section, pick out the yellow diamonds first. We have diamonds starting at $15,000 and going all the way up into the multi-millions. So the fact is that we very strongly recommend the yellow flawless diamonds while you can still get them. And the fact is that very few of them become available a year, maybe 100 for the entire world. It's something that I've invested tremendously in, as have my family and as have my clients. Most of my clients own yellow flawless diamonds put away for retirement and for safety. Now, let's be realistic about this. If you had $20,000 to invest, and you put $20,000 into the stock market as an example, where is that market going to be in 10 years from now? It could be higher, but it could be much lower. You could make money, but you could lose basically everything. In a rare colored diamond like a yellow flawless, that $20,000 diamond in 4 years is going to be worth $40,000, and in 8 years is going to be worth $80,000. So over a 10-year period, a $20,000 investment in yellow flawless diamonds will reward you with a $100,000 return. If you ever wanted to retire one day, why would you want the uncertainty of having your money in a market that you have no idea where it's going to be when you're ready to retire, like the stock market? With your retirement savings plans, when you see your statements at the end of each month, you get sick over it. Well, that wouldn't happen with a diamond. So I'm suggesting that in combination with your other investments, you want to own a yellow flawless diamonds for your safety, protection, and retirement. I've bought these diamonds all throughout my life, and I've bought these diamonds for my children when they were growing up, and now I have 3 grandchildren, and they all own yellow flawless diamonds put away for their future. So with the uncertainty in the world financial markets as they are today, with the fact that we don't know whether, Greece and Italy and Spain and Portugal and Ireland and all these countries in Europe will even be on the euro anymore. We don't even know if the euro is even going to be a currency. Is it possible that once they start to print all this money and inflation goes crazy, that the U.S. dollar is going to drop down to 40 or 50 cents? All those things are possible, but if you own a diamond, that diamond could be sold in British pounds, Japanese yens, Chinese yuans, or whatever currency. You're not restricted to only one currency where you could lose all of your money. Diamonds are one of the best investments you could ever possibly make at this time. The problem with diamonds in the past has been, everyone knows they're a good investment, that they hold their value when they go up, but how do you resell them? We know that was an issue, and that's why we built our own auction business. H. Siegel Fine Auctions was built for our clients to resell their high-end collectibles and their diamonds. And we've had 7 auctions, and every auction has been sensational. Now, we had our last auction on Tuesday. It was just a very small auction. We didn't really even advertise it. We had a lot of requests from clients that wanted to buy inexpensive diamonds. Clients that couldn't afford $25,000, $30,000, $50,000, $100,000, but wanted to buy diamonds, that were maybe a little bit more reasonable, and we had some of those diamonds, and we did offer them some beautiful yellow flawless diamonds, and pretty well everything sold, and everyone had a wonderful time. But the most important thing is that this auction website is a one-of-a-kind. Nobody else has anything like it. It took us 2 years to build, an awful lot of money. I insisted that it was live in real time because we wanted to sell every single piece for our clients, and that's exactly the way that it works. I've never been more proud of anything that I've built than H. Siegel Fine Auctions. So that's definitely something that you would like to get involved in. We've had our last auction for the summer. We will resume again in October, and we will let you know when the next auction will be coming up. People all around the world are participating in our auctions, and we're the only firm that has their own auction business because we're the only company that can resell our clients' diamonds. So again, if you want to get into the rare colored diamond business and you want to deal with a firm that not only cuts their own diamonds, polishes their own diamonds, will sell and deliver these diamonds directly to you, we will keep in touch with you. We're now putting out our Rare Colored Diamonds newsletter starting very soon. You can all subscribe to that for free. We'll educate you. We do online seminars for diamonds. If you want to get involved and learn more about diamonds, which is a very smart smart thing to do. Go to rarecoloreddiamonds.com and sign up for one of our free seminars. It takes about an hour to do. Either get a bunch of friends together, an investment group, or do it on your own. It'll be more than my pleasure to spend that time with you, explain everything about the rare color diamond market and how to make money in the diamond business. And that's, again, something that we bring to our clients. So we have rarecoloreddiamonds.com, the foremost website in the world for rare colored diamonds. There's diamonds on that site, like the featured diamond this week. You will never find a diamond like that. A 25-carat flawless intense yellow diamond. Are you kidding? That diamond is worth a fortune, and that's a diamond that you put away for 4 or 5 years, and you'll double or triple your money on that. Now, obviously, that's not a diamond for most people. That diamond sells for over $1 million, but the fact is that could turn out to be a $3 to $4 million investment over the next few years for you because very, very few of them exist. If you want to see something ridiculously rare, go to the purple diamonds in our website. There's only one. It's a 1-carat heart-shaped, fancy purple diamond. It's a one-of-a-kind. It's worth over $1 million. But when you see the color of this diamond, it's like nothing you have ever seen in your life before. In fact, most people in the diamond business have never seen what we are featuring now. They've never seen a 25-carat intense yellow flawless diamond, and they've never seen a pure purple diamond. So the fact is that we go to extremes to get our clients the diamonds that they need to make the returns that they need to make. And again, I've never been more proud of something that we've recommended, the rare colored diamond market. There's no volatility, there's no loss potential. Yellow flawless diamonds never ever fall in price. And when you get into these extremely rare, larger yellow flawlesses and pinks and blues and that, these diamonds go up more than any other investment. There's got to be a reason why the wealthy are buying these type of investments. It's to hide money. Is to put it in an asset that doesn't go down in value like stocks and commodities that are volatile. So you can literally walk around with $1 million diamond in your pocket and nobody would even know it. Cross a border, start all over again, traded it for another currency. So the fact is there's never been a better time to be in the rare colored diamond business and market than right now. Because with what's coming forward and the inflation that is going to come as a result of QE 3, 4, and 5, the diamond market is going to explode, and it's a market that you need to be in because it's safe and it can give you direction. You know that in 10 years, a diamond that you bought for $20,000 is going to be worth something when you go to retire, but you certainly can't say that with the stock markets. The other diamonds that we recommend very strongly, and we have 100 new Argyle diamonds coming online next week. We just got all of our diamonds from Argyle. They're just coming out of GIA. The Argyle mine produces 95% of the world's pink diamonds. These are the most beautiful diamonds in the world. The mine is going to close before 2018. It means there will not be any more pink diamonds. 95% of them will be gone off the market. If you're one of the fortunate few to own an Argyle pink diamond, we believe you'll make 8 to 10 times return on your money over the next 10 years. So we have 100 new Argyle pink diamonds coming on our website over the next week. They'll all be videoed. They're all GIA certified. They're all laser inscribed. These are amongst the best investment diamonds, and you do not have to be extremely wealthy to own them. You can get involved starting at $20,000 and own a pink diamond. In fact, what you're also going to see very soon is our new catalog for our Argyle Dream Collection of diamonds. So what we do with these magnificent pink diamonds is we set them in the most beautiful pieces of jewelry. And our catalog is coming out all in video, all to music, classical music. Nobody does in the diamond business but what we do. But again, this is my business. I eat, sleep, and drink it 24 hours a day. Nothing is more important than my clients doing well. And again, those that are in the diamond market, they know what they have. When the stock markets and commodity markets are as volatile as they are, it's nice to know that you have an investment that isn't doing that, that isn't losing money. So again, in the whole grand scheme of things, you need to own gold, you need to own silver, you want to have some diamonds put away for yourself and for the family, and you want to keep some cash on hand. I'm not in the stock market. I don't invest in stocks. It's way too risky, and you don't invest in stocks when a country is going bankrupt. Every market has its time. Now is the time for hard assets because of what's coming forward. And again, we've seen seen it happen. We've seen gold go from $250 to $1,900. We've seen silver go from $4 to $50. We've seen oil go from $18 to $150, and we've seen diamonds do nothing but go up in value. In fact, back in 1980, you could have bought a yellow flawless diamond, a 1 carat, for $500. Now they're $20,000. That's how well the rare colored diamond market is doing. We're going to see a price increase in yellow flawless diamonds coming up in September. If you are going to invest in these markets and buy a diamond for safety and for profit, I'd suggest you do it before the prices go up in September.
Connect with Harold. His website, rarecoloreddiamonds.com. He was the very first person who brought to us colored diamonds, and he started his website, Rare Colored Diamonds, back in 2005, well before anyone else. He wrote that famous article, Natural Fancy Colored Diamonds, Best Kept Secret, in August of 2005. Here we are 7 years later, and Harold is the world leader when it comes to investing, helping you invest in rare colored diamonds. RareColoredDiamonds.com. The telephone number 1-800-432-1022. And keep an eye on hsfineauctions.com. You can go and take a look at the past items that were auctioned off over the past 6 auctions, and we will have another auction coming up in the fall. But now is a time for hard assets. In fact, Mark Cuban, who is the owner of the Dallas Mavericks, billionaire. We have a story in our newsletter this week. Mark Cuban on his Facebook shares, I took a beating. We have another story, new details on how Wall Street stuffed Facebook stock into small investor accounts while smart money ran for the hills. Mark Cuban tweeted, right now, the stock market is the same as gambling. He tweeted that via CNBC this week and an interview. It is a time where you need to be very, very cautious. And Harold, another thing to keep in mind too, Italy needs a bailout. They're talking about Spain needing a bailout. Sure, they bailed out Greece. Now Italy and Spain, they're in trouble. We've seen bank runs in Greece. We have a picture in our newsletter. They're talking about bank runs in Spain. We saw a bank be shut down for an entire month. People that deal with that bank in Italy they're out of luck. Even during the financial crisis, there were bank runs in the United States, in Los Angeles. I remember we had a story where the goaltender for the Los Angeles Kings, former GM Rogie Vachon, was lined up at a bank trying to get his money out of that bank in California. Harold, I have never heard of a diamond run. Have you? Where I've heard of bank runs. I've never heard of diamond runs.
No, it doesn't happen, my friend.
No.
It's so private. Again, the fact is that it's a phenomenal asset to own. Everybody who owns them is just enamored by them. They're so beautiful. Most people didn't know how to invest in them, how to make money in the rare colored diamond market, never knew how to resell them. Again, when I do something, I try to do something at the highest level. And again, it was one thing to be able to bring rare colored diamonds as an investment to our listeners and clients, but it's another thing to be able to resell them for them. And again, I'm very, very proud of H. Siegel Fine Auctions. It's the future of the business. It's just starting. We have to, build it more and more and get more and more clients and people all around the world participating. But, nobody's really selling their diamonds. The next 5 years, we anticipate making most of our money in the next 5 to 10 years in diamonds. So again, we anticipate that with inflation coming and everything else going, the next 5 to 10 years is when we intend to clean up.
Speak with Harold. Talk to him about that featured diamond of the week. It is a stunning, stunning diamond. This is a diamond that you purchase this. You have this as an investment. It is a 25-plus carat cushion-cut fancy, intense yellow diamond. You can see the video of it on Harold's website, rarecoloreddiamonds.com. Get our free weekly newsletter from Harold as well. Get the diamond section of the newsletter. You can connect with him, 1-800-432-1022, the website, rarecoloreddiamonds.com. To invest in precious metals, have an allocation of gold and silver. You can speak with Worldwide Precious Metals out of Vancouver, a Canadian company. Harold, that's the only company he recommends. Speak with them about starting your own precious metals investment account today, 1-866-623-2002. And then speak with Harold about diamonds, rarecoloreddiamonds.com, 1-800-432-1022. In the silver section of our newsletter, we have a quote from Morris Hubbard. He says, "My technical work indicates that it could be late 2012 before the silver price really makes a dramatic move higher." That's why we were saying we need patience in this market at this time. He says, at that point, I expect it to begin to outperform gold dramatically. At all prices under $30, silver is a strong buy. Morris Hubbard out of Vancouver. Also, Stephen Lieb, money manager. He said, Japan is just now putting in 3.2 gigawatts of solar. Now, 3.2 gigawatts of solar is not a lot, but the small amount of solar requires about 400 tons of silver. That is just the first step in Japan. You know, China will be coming in behind the Japanese with heavy solar use. What you're talking about here is shortages of silver over the next 5 to 10 years, in his opinion. Massive, massive shortages. We have about 5 minutes left in our show here, Harold. One of the stories that I really wanted to get to, and this relates to precious metals investing, diamond investing. Sure, we have the sovereign debt crisis, but the head of the Postal Department in the United States came out last week and said, we had it in our newsletter, the United States is, if they don't do anything, they're basically Greece. And we have a chart in our newsletter. The U.S. per person debt is set to increase 7 times faster than Italian debt. In fact, in 2012, per person, the debt in Italy is $41,200, U.S. $52,900. In 2017, the debt in Italy will be $43,200. In the United States, $67,500. And one of the other stories, and this is a critical read in my mind, there's a chart and a story that came out this week. The funding gap for state retirement benefits is set to rise in the United States to $1.4 trillion. And you can see that in the newsletter. A pension plan is considered healthy if it has 80% funding. A new Pew report finds that many are not. In fact, it's quite shocking. They found 34 states failed to maintain safe levels of money in the pension funds they operate, which most experts agree is about 80%, as I mentioned. 4 states, Connecticut, Illinois, Kentucky, and Rhode Island, didn't even have 55% of the money they need in the long run. It is literally shocking, Harold, to see what's happening in the United States when it comes to the money that will be needed, not only for their entitlements on a federal level, but on a state level, and I would imagine even on a citywide level. When you have a city like Detroit or Stockton, California, they're borderline bankrupt. I don't know how. You look at the long term, if you have to have patience and a long-term vision for this thing, I still maintain that hard assets are going to win out over the long term when you take a real critical look at what's happening with sovereign debt, U.S. debt and deficit, the jobs, the real estate, geopolitical. I agree with Jim Sinclair, quantitative easing to infinity. All these things line up in favor of hard assets.
You bet. And just look at also what happened because of 2008 and the stock markets plummeting and the real estate markets plummeting, that most Americans, especially the middle class, lost over 40% of their net worth. And that's something they cannot make back. So, again, it's just getting worse and worse. They're just dealing with it almost on a day-to-day basis. But I can assure you that, again, all we need to do at this point here is keep our head about us. There's nothing that has changed. The fact is that as bad as the situation gets with the debt, there's only one way out of it, because they can print and we can't. When we have financial difficulties in our household, we can't go to a printing press and print new money, but the government can. And by printing it, it makes their dollar weaker and weaker, which buys less and less. And with oil prices and food prices still high, the fact is that that's inflation. It'll get to an even higher level, and that's why gold and silver and diamonds are the best investments you can make. Just be patient. patient. Don't trade. Don't do anything crazy. Don't speculate. But I can assure you that these markets will go higher, and we will be standing strong at the end when this whole thing is over. Gold, silver, and diamonds is where all the money is going to be made. And I'm still extremely bullish on oil, even though prices have fallen. I know why they have fallen, but oil prices will still be back up over $100, and there's no doubt in my mind.
And Harold is very bullish, even though he likes hugging bears. Harold is in Colorado. He's spending the summer in Colorado, working vacation. And Harold, I know you're the bear whisperer, and that's what we'd like to call you. And we will talk to you next week. Thanks for a fantastic show, and go out there and hug a bear for us.
Okay, real fast. A bear was in the neighborhood the other day, and our neighbor is William Macy, the actor who was in Fargo and all those movies, and he ended up shooting the bear. The bear came into his house and attacked him.
Wow.
So that's because there was no snow. The bears have come from up high where there's no berries looking for food. So it's going to be one of those years this year. But I want to wish everybody a wonderful weekend. Thanks for listening to the show, and I wish you all a very profitable day.
And bear with the hard assets. Over the long term, you will be a winner. We are firmly convinced of that. Connect with Worldwide Precious Metals, wwpmc.com, 1-866-623-2002, rarecoloreddiamonds.com, 1-800-432-1022. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.